On the regulatory side, I laid out a very clear agenda almost 4 years ago, somewhere between 25 and 30 items, rules, orders, applications that we wanted to get done. And I think we did a pretty good job. Later on, maybe in December, January, I'll have a full assessment of what we've accomplished. So very proud of that. And this is around risk management. This is around governance. This is around conflicts of interest. This is being responsive to the market.
What is your next step after the presidential election?
Over the next couple months, as we get closer to Inauguration Day, I'm going to work with the Trump transition team to make sure that we have a seamless and smooth transition, as is customary and as I experienced 4 years ago when President Biden won election. I'll work with the team. We'll get news from the White House probably closer to Inauguration Day on who they would like to be acting chair. And at that point, we will run through the sort of process within the organization to make sure that that individual, most likely one of the two Republican commissioners, becomes acting chair. I will step down, hand over the keys, and move on from there.
Will you stay on or exit after the transition?
After I hand over the keys and pass the chairmanship on to one of my colleagues, I'll start to look forward to moving on.
What is your greatest accomplishment?
We did a little bit of a survey of where the markets were, how they were performing, what we needed to do as an agency to be better stewards of the markets, but also to be top gun regulator. And I think we laid out an agenda that was clear, that was impactful, and that was surgical. And I didn't stretch myself beyond what was necessary. And when I came into the job, I was very deliberate about making sure that we recognized what was working and identified what was not working, and only address those things that needed to be addressed because they were not working. I think it's easy to come into these jobs and feel like you have to have this massive agenda and you need to do all of these things. And I think that is a poor approach to the job. We as chairs and my predecessors, my successors have a duty to be stewards of the agencies, to be protectors of the markets, to support the American economy and the American consumer and investor. And that was always my focus. So as I look back on my 4 years, notwithstanding the accomplishments around the rules, some accomplishments around climate policy, some real significant accomplishments around AI and data, which I think is going to put the agency on a very positive but different trajectory than it is right now. I'm very proud of the fact that we stuck to a very surgical agenda that was very targeted and that recognized how our markets are working and what we needed to do to strengthen our markets. And I'm hopeful that I'm going to pass on the agency and, in essence, the markets in better shape.
What would you like to do over again?
There's always the anxiety of wanting a little bit more time, right? If I just had a little bit more time, I could have done this or I could have done that. And there's certainly a few things that naturally, and this is the way it works, you have an idea of what you want to accomplish, whether it's a rule or a policy, and you have to pivot, right? You can't just keep going down this road, because as you go down the road and you start drafting and you start thinking about policy, you learn new things. And when you learn new things, you have to adjust. And obviously over the 3 years that I've been in as chair and with this full commission, we've adjusted, and you lose time when you adjust, but you have to adjust because you don't want to push forward something that's either imperfect or that's going to have unintended consequences. There are a couple of rules around risk management, around operational risk that I would have loved to have a little bit more time to work with the commissioners and get done. But naturally, things happen, elections have impacts, and I'll move on. And hopefully, at a minimum, whether it's affiliates, which I just discussed, and these conflicts of interest issues that we're seeing with some of the entities, crypto. A huge part of my chairmanship is talking about this emerging market that's unregulated, in part, where there are gaps in regulation. And I think as you're seeing with the new administration and some of the rhetoric in Congress, you're probably going to see, I would bet, legislation coming out in the next year or two that would expand the authority of the CFTC. And I think in part that's because of a lot of the comments and statements and advocacy that I've been doing over the past 3 or 4 years. And, would I like to be a part of that? Sure. But ultimately I can view back in time, if this does in fact happen, that I was a part of this. I was, arguably a foundational setting the stones of what was to come in the future.
What does the next administration have to tackle?
I think it's extremely important that the agency get reauthorized. The last time the agency was reauthorized was 2008. There are a number of issues that need to be addressed, notwithstanding the actual authorization of the agency. So I am hopeful, and I think multiple members of Congress see that as a priority. Our whistleblower office has been hugely impactful. We need to make sure that we're making the appropriate adjustments to our whistleblower office so that it remains resilient, strong, and operational. Crypto, as a regulator and observing this market grow, ebb and flow over 7 years now, it is imperative that Congress fill these gaps in regulation. Prediction markets, I have zero problem with prediction markets. The commission has been very consistent with its position on prediction markets around political events and elections. I don't think the commission will change its position, but who knows? We'll see what happens in the next administration. Ultimately, as you pointed out, there's an ongoing court case. The district court ruled against the CFTC. We appealed. We'll see what the appellate panel decides. Prediction markets are, on their face, I think, a net positive. And there's a lot of interesting contracts that have a positive impact. But as I've said many, many times before, when you have prediction markets on political elections, I think it's not healthy for the agency and it's not healthy for the country. There's a lot of debate around these event contracts, these prediction markets overseas. But if you look at specifically prediction markets on political events, they're sanctioned under gambling laws. They're not sanctioned under a financial market regulator. I think it puts the CFTC in a very uncomfortable position regarding enforcement, surveillance, and potential impacts on elections. So I am hopeful, despite a little bit of a mixed bag in Congress about those who are against prediction markets on political events and those who are supportive, that they will get together and figure out whether or not the legislation needs to be clarified. And there's all sorts of contracts that are being listed right now. And it's going to be a significant responsibility for the agency. And it's going to require more personnel, more expert personnel, and more resources, because the sky's the limit on the types of contracts that these entities will list. And you're obviously seeing a huge influx of retail participants and retail customers. And that's going to change the dynamic of the agency and its responsibility. And I hope that we will continue as an agency to evolve to address those specific customer protections. It's not, just about customer segregation anymore. It's about information, education, and whether or not the retail investor understands the risk that it's taking on.
What is the future of DEI at the agency?
I've cared deeply about the agency and the health of the agency, the personnel, and making sure that I'm a good steward of the agency, because a healthy agency is a healthy market in my view. And one component of a healthy agency is a strong, confident, proud staff that is diverse. And I thought as I got into the job 7 years ago, but certainly, 4 years ago as chair, we needed to expand the tent of individuals that we recruited and that we hired. And I think we've done a really positive job in finding, new entrants or a different caliber of employee outside of the traditional employee that the CFTC hired. And not that there's anything wrong with who we've hired in the past, but we have such unique markets that impact all Americans from all sort of walks of life that I think it was really important to recruit from rural areas that have impacts on agriculture and energy, from urban areas that have impacts on obviously food and financial sort of access. It was a priority of mine to make sure that we use our human resources department and our DEIA functions within our Office of Minority and Women Inclusion to cast a wider net, to tell people and to teach people about what the CFTC is, and to recruit from different walks of life so that we can be a stronger agency.
What is the future of the relationship between the CFTC and the SEC?
In terms of the relationship, it's healthy. It always has been. There's a natural friction between the agency, but it's a healthy friction where you're dealing with, market uncertainty and jurisdictional uncertainty. We dealt with that 40 years ago with security futures. We dealt with it 15 years ago with swaps, security-based swaps, commodity-based swaps. And I think this is just another chapter in that story. Ultimately, and it frustrates me, and you use the right word because this is the word in the press, is the preferred agency. That's nonsense, right? If you look at our enforcement record over the past 10 years, let alone the past, 2 or 3, we are as strong as any agency in the world on enforcement of crypto. And that is a testament to the staff, and that's a testament to our markets and the jurisdiction we have, but it's incomplete. And because the market, this crypto community wants us to be their regulator, that's nonsense to me, right? The bottom line is there's a gap in regulation around commodity assets. There are security tokens, and the SEC should regulate those security tokens. But there are commodity tokens, which include some of the largest tokens in the ecosystem, Bitcoin and Ether, to just name two, that are unregulated under existing law across the board. And this is where the Congress needs to act to fill the gap. So we are as tough as they come. We are as effective and impactful as they come in terms of being a regulator and a cop on the beat. The idea or the notion that we are a preferred regulator, I think, is an industry looking to be regulated. And there are pros and cons to that, right? I think they see regulation as legitimacy, and that's fine. But ultimately, in this balance between legitimacy and an unregulated market, I take regulation every day of the week. There are customers being hurt. There's money being lost. Our enforcement program proves that, and Congress needs to act.